talk about the impact of inflationary prices as well as the outlook on QSR with Anoop Bector, who's the Managing Director of Mrs. Bectors Food Specialities. Thank you so much for taking time out and joining in. I want to begin with the price hike that the company has undertaken, largely owing to the raw material price inflation. Can you just start off by talking about your overall revenues as well? Because we understand that nearly 65% comes in from the biscuit segment, where a lot of the key raw material prices have been inflated. So how much of this inflation will you be able to pass on, and will you be taking on more price hikes as well?
Yeah, so there has been continuous inflation for now more than 18 months, which has been affecting especially on the vegetable oils, wheat, packaging material, fuels. So we have, had to increase the prices, and we continuously increase our prices, have been increasing our prices for the last, 8 months. So there has always been, in the biscuit industry, there is always a lag which is there. And we normally take around 3 months time, to increase to cover up the price increase. So we have relatively been able to increase our prices and, pass on the effect to the market. In fact, the last price rise is just happening now, which we are taking up. So we have been on the market, but, on the price rises and covering up on whatever the cost increases have come to the company.
And what is the percentage of the price hike that you've undertaken?
See, we were not anticipating the Ukraine-Russia war to come in and further escalate the problems which had come in. But, company has been able to take a substantial price rise from the market. And we are looking at, covering up all the cost increases through not only price rises, but also efficiencies. We brought in better efficiencies into the savings. There are a lot of cost saving initiatives which have been taken in the company. So effectively, we shall be well able to cover up our costs.
So while margins have, of course, been eaten into thanks to all the factors you talked about, including food inflation, rising input costs, where do you finally see margins settle at? What is it the street should be watching out for when it comes to the company?
So definitely, last year has been a year which was where the inflations, we were not sure how they are going to be, coming. And it took us some time for the price rises to be affected into the market. But this year, we are much better placed because the price rises have already started happening 6 months back. So we would see a better EBITDA margins coming in this year, than previous year.
Now, obviously, while there is concern of price hikes and how that's going to impact on the biscuit front, I'm sure it's easier to pass on prices for the more expensive item, like if you were to talk about the bakery bun segment, for example. So will we see you get more aggressive there?
Yeah, so we work on an open book policy with all our QSRs and, any benefit on account of price rise or price decrease actually goes into their account. So, we are into the wheat season now, and whatever price rises will be anticipated will have to be passed on to the required customers.
Now, given the fact that Yum Brands has taken a price hike, given the raw material price inflation, walk us through what kind of a price hike you've taken when it comes to the bakery business?
These things are still being worked out. One thing is very clear, there is an ingredient price rise, which is not temporary right now, because it's been very long for price rises, continuously prices going up, and there is no foresight of prices coming down. So price rise is imminent, so whatever impact is going to be coming onto the product will have to be passed down to the customer.
And the company as well has seen a strong growth, nearly 41% in the consumer bakery segment for FY 2021. What is the growth outlook going forward, given the increase as well in the number of restaurants that have taken place?
So we are focusing very, very heavily onto distribution. We are adding a lot of people on the ground, and we are increasing our distribution. And we actually plan to add around 50,000 outlets, in this coming year. And we will be at around direct coverage will be at around 250,000 outlets, and AC Nielsen will be much higher. So basically, our agenda is very clear that we would be looking at very, double-digit growth numbers at mid-level. Where that's a sort of growth our company is looking at for coming year.
You'll be one of the best people to also check with what's happening on ground. We're coming out of a long weekend, restaurants are full, our delivery partners are taking longer to deliver our orders on Zomato and Swiggy. So you tell us also, what is the demand on ground looking like, particularly from the quick service restaurants?
So QSR business has been doing very well this year, and we have seen great growth numbers, because last year was a number when it was very dull because of COVID impact. So this year they have done extremely well, and the future plans look very bright, and we look forward to servicing them and gaining from their increased volumes.
Before we let you go, now we all know about the company's strong presence in North India. What is the geographical expansion plan for the new financial year? Are we also going to see more capacity additions, more store openings?
Yeah, so what we are doing is we are increasing very aggressively our coverage in North India, especially in Uttar Pradesh, Haryana, Delhi, Uttaranchal, these markets. And also our focus is also moving on to modern trade, where we are getting our presence felt in the North Indian stores, and now we will be moving to West and South. We have already started making our representations. And also we are opening up any town above 5 lakh population in South and West. So Cremica biscuits will be available over there. On the bakery front, we are looking at putting up a new greenfield bread line, which is fully automatic bread plant in adjacent to our bun line. So, overall, we are looking at very, very aggressive plans for this year.
Will you, going forward as well, be focused more on premium products in order to help improve your margins and reduce the low margin biscuits?
No, see, the company has always worked towards premiumization. And we have continuously over the years seen our premium percentage numbers going up year on year. So we have also, since the last year and this year, we have from 2021 to 2022, we have seen considerable growth coming in. In the coming year, we are seeing more growth being brought in, because this is about distribution. So as we keep improving our direct distribution, our premiumization will keep improving. So our focus will continue to be on the biscuits as a value and a premium provider, because value actually gives us 70% of the volume. But premiumization is a very, very important growth strategy for the company. So our plans on focused premium increased sales is continuously going to be there.
And finally, given that the Indian biscuits market is expected to grow at nearly 9 to 10% over FY20 to 25, what kind of growth can we expect from the sector as well as from the company itself long term?
Yeah, so since we are looking at very aggressive distribution numbers from this year onwards, and we have also gone in for complete automation with our sales team, including our distributor management systems. So I think this year we are going to be showing double-digit numbers. That's what our anticipation is, and we will definitely be growing much ahead of the market. Yeah.
All right, it's been an interesting discussion. Thanks very much for joining in and sharing with us the outlook on the business plans as well as the impact of raw material price inflation and the price hikes that have been lined up. That's Mrs. Bectors, down about 2.2%. Not surprising given that the rest of the market as well is painted with a deep coat of red this morning.